If you've seen my recent videos, you know this isn't a one-time thing, and I've shown you one pattern that's popped up again and again across completely different markets. Is it coincidence, or is there a rhythm to the market that DR keeps catching? This past week wasn't different. So let's look at the top 7 trades and uncover why the DR strategy just keeps hitting the mark over and over again. Number 7, Euro versus the Australian dollar, Thursday overnight DR session trade. As I asked in previous top 7 videos, does this constellation between the ADR and ODR session look familiar? Surprisingly, it repeated again in the Euro versus the Australian dollar this time. We have a DR downside model intact along with a green DR box followed by an immediate long confirmation. Given this, what are our expectations? We need to be selective with our targets, as the ADR levels could act as barriers for price. The higher the target, the lower the probability, something to keep in mind. A key detail here is that the 1 standard deviation level nearly lines up with the ADR low, and the 1.5 standard deviation level aligns precisely with the ADR highs. Looking at where price found support in the overnight DR session, which could act as extra confluence for further upside, we have 2 previous DR session levels from earlier in the week lining up, with another one aligning with the current defining range. Returning to the ODR, we begin to look for entries and patiently wait for any clear signs. Shortly after the confirmation, price retraces back to the DR high and rejects it twice in line with the previous DR session level. This presents a good entry point, and with the opening and closing price being relatively close, you could consider covering them with your stop loss. Targeting the 1 standard deviation level offers a solid 3R potential without even reaching for the aftermarket DR levels. Look at those clean rejections, especially how the bodies of the candles clearly respect the previous DR session level. Are you still doubting the importance of DR levels? You really shouldn't. As the session ends, you can either close your position in profit or move your stop loss to break even and continue aiming for the initial target. With the regular DR session opening, the target has been met and all ADR session levels have been violated. Number 6, Gold Futures, Tuesday regular DR session trade. Let's break down the Tuesday regular DR session on the gold futures market. Starting with the DR intraday cycle across all 3 sessions, we see a DR upside model intact that gives us a strong foundation for long setups. Looking further back, we can see where the upside movement in the regular DR session's first hour came from. The previous day's regular DR session lows were rejected to the tick. The overnight DR session mid and previous volume imbalances stacked up in this area supported the upside momentum as well. Since the regular DR session confirmed longs with a higher probability throughout the session by closing above the DR on a 5-minute time frame, we are focusing on the DR upside model and looking for a long trade. In terms of previous DR session levels, 2 key levels align with the current defining range, which can act as additional confluences for a long setup. Additionally, we have some previous WIBs from the overnight DR session and an intraday gap imbalance highlighted in blue. While we wait for a retracement, make sure to highlight open magnetic volume imbalances inside the range, as they often act as magnets for price to be rebalanced. The likelihood of price returning to these levels at some point is high. Price retraces into the defining range and rejects the previous day's IDR highs for the 3rd time following the long confirmation. This presents the first potential entry. Unfortunately, the risk-to-reward ratio here is too low since your stop loss would need to cover the open magnetic WIB and the opening price at least, so we hold off for a better opportunity. About half an hour later, price drops deeper into the range and rejects the IDR mid 3 times, failing to close below it. These types of rejections cannot be ignored. Another strong confluence here is the open magnetic WIB that's been left behind, which aligns perfectly with a potential setup. With this entry, you can cover the retirement setup area and the WIB. In case of a stop out, you're already prepared for the next high probability setup in mind. Price offers one more opportunity to enter before reaching the next standard deviation level of 1 and the target. This trade shows a powerful approach and the importance of being prepared and having pre-planned scenarios in place. Number 5, US dollar versus the Japanese yen, Monday overnight DR session trade. Let's break down Monday's overnight DR session on the US dollar versus the Japanese yen. Starting with the relationship between the aftermarket and overnight DR session, we see a DR upside model intact, which sets the tone for a potential long setup. The opening of the overnight DR session found support from the ADR highs and closed as a green DR box with a long confirmation shortly after. What's important to notice here is that the previous day's regular DR session levels line up with the current defining range. These can be used as potential extra confluences for long trades. With that in mind, let's wait for a retracement and clear trade signals. Few minutes later, price respects the previous day's regular DR session highs, the current IDR high, and rejects the closing price before pushing higher. At this point, price retraces back to the same area and rejects it once more. This is your potential entry. You now have several confluences aligning: a DR upside model intact, a green DR box with a long confirmation, previous RDR highs lining up, a rejection from the closing price, and price is also closing above the IDR high, which is the red dashed line. Targeting the next standard deviation level of 1 offers more than 3R at this point. Price pushes higher and reaches even the 1.5 standard deviation level. Are you starting to see the value of paying attention to all these small but crucial details? This is beautiful price delivery in action. Number 4, Gold Futures Friday regular DR session trade. The RDR session closed as a green DR box followed by a long confirmation, giving us an early signal for potential upside throughout the session. Zooming out to see the bigger picture, we notice that the day started with the aftermarket DR session sitting inside the previous day's regular DR session, which I refer to as the DR range contraction model. Later in the overnight DR session, price took out a significant low from the previous day's regular DR session before pushing higher, likely where the squeeze occurred. To understand what caused this upside expansion in the regular DR session, we can see it found support from both the previous day's regular DR session lows and the overnight DR session lows. We can also highlight previous DR session levels aligning with the current defining range to act as additional confluences for long setups. In terms of volume imbalances, there are several aligned with the aftermarket DR session highs and some in the lower area of the defining range that we can turn on and off as needed. Lastly, check for intraday gap imbalances if there are any aligning. Now that we're set, let's wait for clear entry signs. Price pushes a bit higher before retracing into the range and reaching the first potential setup area. Look at the rejections from the bodies of the candles at the intraday gap imbalance. At this point, you have several confluences lining up: a green DR box, a long confirmation, rejections from the ADR highs, volume imbalances, the gap imbalance, and price closing back above the closing price. What more could you ask for? In this case, it may be wise to consider covering the ADR mid with your stop loss. By now, you should understand the importance of ADR levels. For your target, the plus 0.5 SD level is ideal, as it not only offers 3R but also aligns perfectly with the previous day's regular DR session highs. These setups might look overwhelming at first, but as you prepare your trade setups in that way, you'll train your mind to recognize specific price behaviors and patterns. This will make a huge difference in live trading when money is on the line. Join me as I teach thousands of students how to trade like a professional. Learn how to trade the DR trading strategy combined with data, get access to exclusive tools and indicators, weekly live trading sessions where you also get deep market insights, which have never been taught in the retail space before, and a lot more. Visit m7er.com for more information. Number 3, S&P 500 Futures Friday Overnight DR Session Trade. Let's look into the interesting price action from Friday's overnight DR session on ES. The day started with the aftermarket DR session within the previous day's RDR session, which I refer to as the DR range contraction model. The relationship between the ADR and ODR points towards a DR upside model, and with a green DR box and long confirmation, we can start to look for confluences that support a long trade. Looking at the bigger picture, there's a significant high that we should highlight and pay attention to, given that we started the intraday cycle in a DR range contraction model. For previous DR session levels, we have some aligning with the current range and another one above, which can be helpful for setting targets. To keep the chart cleaner, I will hide some of these bigger DR levels but keep them accessible to hide or show if needed. We have intraday gap imbalances from the aftermarket DR session aligning with the lower area inside the current defining range, along with several previous WIBs. For now, we will focus on the upper ones and wait for a retracement into the defining range. What do we see here? We get a to the tick rejection from the previous DR level in line with some previous WIBs. This is a strong signal for a first entry in the session. The retracement also left behind an open volume imbalance, which can make us anticipate at least a move to the upside and out of the defining range. Targeting the 1 standard deviation level just above the significant high offers more than 3R, with the stop loss covering key areas. As the session comes to an end, you can choose to close the trade in profit or hold on to the initial target with stops moved to break even. Price reached even higher levels during the session and your job as a trader is done. Number 2, Nasdaq 100 Futures Monday Overnight DR Session Trade. Nasdaq started its Monday with a large downside move in the aftermarket DR session, trading below the weekly gap imbalance. The overnight DR session confirmed shorts, so naturally we're looking for short setups. Why? Both sessions indicate that a DR downside model is intact. A red DR box would ideally support this short setup even more, but with the green DR box we will need to stack several confluences to support the short trading idea. Looking to the left, we see some previous DR levels that can act as additional confluence, so let's highlight those. Returning to the current DR session, let's check for volume and gap imbalances. Several WIBs have supported the current downside move, and there's also an intraday gap imbalance created in the first hour of the session. Lastly, we will pay attention to open volume imbalances, as these will likely be rebalanced by price at some point and can act as magnets for price. Now look at this price action. Isn't it inviting for a short setup? You have a DR downside model intact, a short confirmation, the open magnetic WIB has been rebalanced, there are multiple rejections from previous DR levels and a rejection from the opening price. A potential 3R setup if you cover the closing price with your stop loss. What a beast Nasdaq can be. And here's the number 1 trade of last week, US dollar versus the Japanese yen, Wednesday aftermarket DR session trade. The session closed as a red DR box with an immediate short confirmation, setting the tone for potential shorts. Looking left, we don't have any previous DR session levels aligning with the current defining range. Price retraces back into the defining range and starts rejecting the IDR mid 3 times, which could signal an entry for a short. If we're considering a short here, we want to see price break below the previous day's ODR highs. This opens the door to targeting levels below, like the 1 standard deviation level. The trade offers more than 3R with stops placed at the beginning of the retirement setup area, making it worth taking your first bullet for the session. Price drops below the opening price but then finds its way back above, retracing deeper into the defining range and stopping out the first trade. However, things are about to get even more interesting. Price now rejects the IDR high and sets up a perfect retirement setup scenario. This presents a potential 3.6R trade supported by the red DR box and short confirmation. Price drops lower, breaking below the DR and closes below the previous day's ODR highs before retracing to the DR low. What about this? You could move your stop loss from the first position into 1R profit and then place another scaled-in position here, making this new entry completely risk-free. Both trades hit their targets, and with the first bullet resulting in a loss, this session still could have banked you 6% and even more, as price continued further down to reach 2.5 standard deviations. As always, don't forget to like the video if you enjoyed it, and I hope to see you in the next one.
We're gonna take on the world.